headset doesn't hurt. Okay. Whew. All right, let's start fresh. Good morning, everybody. Welcome to October 2nd, which is a Wednesday. And I'll just start from the top. Three key skills that you must have in order to make money, period. Most important things that you guys can have. Number one, you have to be able to read your charts correctly when you are a technical trader, period. If you don't read your charts correctly and there's three components to reading charts. The first one is determining where the market is likely to continue. And we do this with, and we'll talk about it, we do it with momentum phase and bar location relative to the trigger lines, which we'll get into. So we're going to go real slow on the basic mechanics of what you must have, see, and do in order to make money. For those of you guys who are new to Nexgen, number one, welcome. Thank you for being here. Number two, we're going to knock your socks off. There's three components to what we do: the basic stuff, and then there's a little more advanced stuff, and then there's ultimately the stuff that you're going to be doing for your own trading account. And we implore you guys to learn the basics first and spend enough time doing simulator and market replay and practicing so that you get these three key things down. And again, we go into chart reading, and number one thing, in order to do a trade, you must be able to say, yes, the market is likely to continue up, or yes, the market is likely to continue down. Without this first bit, you never are going to make any money. And you're never going to be confident in the trades that you're doing. And then number two, when we talk about profit targets or when to stop trading, you have to understand where the market is likely to go. I guess I can blow this up a little bit more. Might be a smidge fuzzy, but right. So number one, is the market likely to continue? Write this down if you need to and make a note. Where is the market likely to go, and where is the market likely to stop? This is literally everything that you're going to have, and you're going to have to be able to do it very well in order to be successful and, more importantly, confident in what you're doing. We have rules. Our rules have been in place for so long. I mean, there wasn't even color TV when we wrote our rules. There was 20% of the homes in America didn't have air conditioning when we wrote our rules. I mean, that's how old they are. So they work. We've done this for 27 years, guys, and it's not the software that's going to make you money. It's your ability to use the software correctly that's going to allow you to make money. Which brings us to the second point, which is you have to have trade entry precision. Now, precision in your trade entries means two things. Number one, you're going to be able to maximize profit. And then number two, when things don't go your way, you're going to lose the least amount possible. And then third and finally, trade management. Yeah, I know, I'm being a little exaggerating here, Gary. Trade management. Trade management is one of the concepts that is chart reading is easy. It's going up or it's going down or it's not. Trade entry precision is really easy. I mean, you're probably, if you're brand new to Nexgen, within a week or two, you're going to have these two down for the most part. Trade management takes a lot longer. And the reason why is because there's a lot of components to trade management that a lot of factors that you have to take into consideration, which we'll talk about. So the first component that we have, and again, in this PDF, which I did post, you guys can scroll up to the beginning of the day. I have this in here for you guys. And this is all the stuff that's in the user guide, by the way. So there's nothing that is new concepts. If you guys did see this, we worked on a redo of our user guide. And And we just kind of broke it down, so hopefully it's a little bit easier for those of you guys who are new to us to kind of break it down into pieces, right? So again, we in the user guide, just to kind of go through it quick: Discord, indicator introduction, trend direction, termination conditions, entry opportunities, what is a high probability trade, trade management, your first 30 days and beyond, and then ultimately uh, capital funding firms. So we put this in the first section because this is the first things that you guys need to learn. The last things that you guys need to learn is market flow analysis. And again, this is where we add the third chart and we look at a lot of things, which we'll do this today. And then this is the part that 92% of all of you don't do, maybe more. Does anybody know what the odds are of a day trader losing money when they get started? They're about what, 97%? So it's possible to make money, but it's not easy to make money. Everybody understand that? It's not impossible, but you have to do the right things. And we've got this trading journal in here. And on this page, you can go in and download the file. Here, I'll download it real quick just so I have it. And I'll show you what it is, because this is where you guys really have to spend a lot of time. Number one, we've posted a lot of your trades in here. So there is a ton of trading examples, okay? We put in a page for favorite looks. And long story short, this is what we want from you guys. We want you guys to be able to put the date, put what kind of trade you make, put a link to your pictures in here, and we have instructions even on the spreadsheet how to post pictures. How are you feeling? Were you feeling good, scared, anxious? Was there a good top or bottom? Right? Did you have your triggers with you? What was the 5-1 chart doing? Did you hit your target 1, target 2, and then notes? And look, I want you guys to understand something. You don't have to do every trade that's a winner that follows the rules perfectly. I think it's, when Janesh and I talked about this, he goes, I document my losers because I want to know if I followed the rules, and I want to know if there was something I could have done better. And many times there's not, but sometimes there is. And you don't learn from winning, you learn from losing. I know that sounds kind of goofy, but the more you understand why you lost and take steps to correct it, the faster you're going to be able to get past that and start making money. So when we talk about momentum, up or down, we're talking about two things. Number one, we're talking about where are the price bars physically located relative to the triggers. And I'm talking about the boxes, right? The bodies, the candles of the bars. If the bodies of the bars are above the triggers, you will never go short if you love money. Did you guys hear what I said? If the bodies of the bars are above the triggers, you will never go short and make money. It's very, very, very rare. What we're looking for is when we're above the triggers, we're looking for pullbacks in price to take long trades. And then vice versa. When the price bars are below, we're looking for pullbacks to go short, and then vice versa. Is everybody okay with this? Short version, but this is in the trigger line video in the user guide, so there's a long detailed explanation, so I'm not going to get into it. When you're doing trend trades, we use terms like momentum. And momentum phase of the large triggers means that not only are the large triggers crossed down, but the price bars are completely below the large triggers, which is the most favorable look you will ever get to sell a pullback. And then vice versa. When the price bars get inside of the triggers, it shows what we call weakening. And again, this is all documented in the first trigger line video, so you can watch it. But, I just want to establish some of the basics first before we get into watching the market after it opens. Not that it's not open and moving, but after 9:30 Eastern. And then look, price bars completely above your large triggers that are going up. That's the most favorable look for us to take long trades. And then when the price bars get inside the large triggers, it's not that you can't take a trade. It just, that's where the market starts to lose momentum. So, again, does everybody understand this? Price bars completely below and wide, best look. Price bars above and completely wide large triggers, best look. Now we have to layer some things together, right? So again, conceptually, just to go through it with you real quick, what we're looking for in trading consistency, making money, and everything else, what we require is consistent trigger line momentum patterns before we take an entry. So when those triggers are going up in green, we're looking for some type of Fibonacci support area to buy in order to make it to the next Fibonacci resistance. Easy enough. Triggers going up, buy a pullback, hope for the next area. I mean, that's short version. But that's every trade we do on every chart. If we're going down, the market is going down significantly, and the triggers say it's going down significantly, we look to sell a pullback to get to the next Fibonacci support. That's it. That's day trading. That's trend trading. When we get into the indicators themselves, and I'm not going to beat up the indicators. You guys can watch the indicator video. But once you start putting on support and resistance, we're looking for two things. We're looking for some type of correct trigger line look, and we're looking for some type of resistance. So if everything is going down, we try to sell the red lines and magenta lines, and if everything is going up, we try to buy whatever lines are helping the buy. That's it. That's not too difficult, is it? You want to know what the hard part is? Sitting on your ass and waiting until one of these looks happens. That's the hard part. I mean, just sitting there doing nothing, it feels counterintuitive, like you ought to be doing something, but that's not the case. You only need a couple of these a day to get filthy rich, and you don't have to do 700 trades, and you don't have to sit there for hours and hours and hours. You need a couple good trades. Short version is, if Fibonacci resistance holds, eventually when the triggers roll down, you're going to go short on a pullback. And again, this is the big chart. This is why we use more than one chart, because we need to find some type of Fibonacci area or some type of area or line in order to make a trade. As I said, you can almost do it from inside the large triggers, but we can fine tune that a little bit further with our smaller charts. And the other thing, look, it's a joke, so let's just leave it at it's a joke, but again, it's a visual representation of this. Let me show you a picture, okay? If you want to commit financial suicide in one easy step, now that means lose your money, blow out your account, have your wife make you sleep in the other bedroom because you suck at day trading, divorce, lose your car, go into debt. Everything bad that can happen to you financially is caused by this look right here. Trying to go long at a blue line when the triggers don't agree. That is the worst thing on the planet you can do. Don't ever do it if you can help yourself. We want to go short when we have a red resistance and the triggers are going down, but we do not want to go long when the market's going down. Everybody okay with that? I say it, but people do it every day. Um, the other thing is termination conditions, right? So we had a little dissertation on, is the market likely to continue, or when is the market likely to stop? And we did a lot of work with this yesterday. And again, if the market is going down as determined by our trigger lines, Fibonacci resistance will usually hold. And then when we reach Fibonacci support, we have to do two things. We have to do two checks, all right? The first one is location. What the hell is this AI assistant? Go away. I don't want you. When the price reaches our Fibonacci support or resistance, you have to ask yourself two questions. How strong are the trigger lines? And where are the trigger lines located? We went through this yesterday a lot, right? Location, location, location. And we were watching the live charts yesterday and we were saying, it won't hold, it has to break. And then, when you sit and watch it over and over and over, it's really pretty clear. Resistance should hold based on the triggers. Support should hold based on the location of the triggers. Now, that doesn't mean later it won't break. We don't care about later. What we're worried about is right now. If you went short and made a bunch of money, do you want to go short again when support holds? And the answer is absolutely not. So the same is true at Fibonacci resistance. And there's two different looks that you'll get at a Fibonacci resistance. The first look is right here on the left. And we have to ask ourselves location and strength of the triggers. So the triggers are pretty strong going up into this red line. Would you guys agree? I mean, they're up pretty wide. So we call that a pretty strong trigger line. I mean, they're weakening a little bit, kind of getting inside, and the bars are inside. But short version is they're still pretty darn strong. And what happens is resistance going to hold because of the location of the triggers. So as long as the location is still below, again, we're not going long again. Now, as we reach support, we're going to ask ourselves the question about whether or not support might hold. And again, it goes to location of the triggers. If these trigger lines are really far above a support line, the chances are support's going to hold and then the market will go back up. And then if you go a little further and say if you had strong triggers before you reach support, the market is much more likely to go back up. Not just somewhat likely, but very likely. A lot of our experienced traders will look to take a trade over here and get the rest of that move. Now, when we reach Fibonacci resistance the second time, totally different scenario in the triggers. Notice that the location of the triggers is well below the Fibonacci resistance. So that's your first indication that yes, the market may hold. The second indication is the small triggers are located below the large triggers. So, when you take into account fibs with strong triggers may stop the market, but we're not probably going short. And then ultimately, if you have fibs and prior divergence lines and just horizontal lines in general, and the trigger lines are well below them and smalls below the large, you're looking to go short as quickly as you can because we know that this has about a 75% chance of making the market go the other way. And you'll see the same thing in reverse when you get to a low. So we've got one at the high and we've got, every line that we do, it's almost the same darn thing, right? When we look at Fibonacci support over here on the left, on the very left, the triggers are down and below support. So that's not good for us to go long. However, that same support line later, see how both triggers are going up now? So it's literally the same price, but one of them will provide you with an opportunity for a long trade because the triggers are going up. And then this one will provide you with the opportunity to sit on your butt and not do anything until it turns red. And then ultimately, if we get to these big yellow dots or magenta dots, especially on the NASDAQ, that could stop the market. It's one of our Fibonacci areas. It's called a 1-to-1. And location, location, location. The location of the triggers suggests that it might hold. Now, there's not really long trades in here because we also have resistance and mid bands that might hold. So we get into a bit of a choppy area, and we can pretty much see choppy areas before they happen because choppy areas are nothing more than support and resistance that may both hold. And the market has to battle it out until somebody wins. And then when somebody wins, we get all of our triggers going up. We've broken Fibonacci resistance, and we buy a pullback to get up to the next. So again, there may be two trades on this chart long. There's one over here, which I didn't mark, and then there's one over here. And, depending on what market this is, what was that, crude? Look, 852, you had trade number one. And if you didn't get a short, then your second trade would come, closer to 10 o'clock, 9:45. So there's an hour in between trades. So you have to sit there for an hour waiting for a good setup. The NASDAQ, you don't have to quite wait as long. But anyway, short version is if you get to a yellow 1-to-1, location of your triggers is very, very, very important. It's not a sell, it's just stop buying. And then you can see where the sells would come from, right? I mean, if a line holds and then support breaks and all of our trigger lines are going down, there's a couple opportunities to go short. So I just want you to see how far away from a top or bottom some of the good trades are. Because it's important to know you're not trying to buy or sell the top or bottom. Very rare instances where new users are able to do that. Again, there's a description, 1-to-1s. The magenta ones against strong triggers are usually pretty good profit targets or entry areas, but they're not necessarily reversal points. And again, every reversal depends on triggers. So we have a termination condition in the user guide. And again, when you go through the user guide, you're going to see this. So understand termination conditions. And termination conditions are basically any indicator that may reverse the market based on the comparison of the area versus the T3 trigger strength and location. Does that ring a bell? Fibs compare the area versus the trigger strength and location. I mean, that's basically all you have to do. Hey, Chris Novak, if you can hear me, we need to fix this so it opens up inside of, not in a new tab. Anyway, I don't know if you hear me or not, but I'll remember that later. So, triggers, 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 triggers. So we have a termination condition that says if you get a third divergence on a chart, or really any chart, or a second higher or lower divergence, it'll cause the termination of the trend. And this is so horrifically consistent. If anybody can find a better way to determine when the trend is over, please let me know. I mean, obviously, if you get to support, you're watching out. But whenever you get a higher divergence and the small triggers are crossed up, it usually goes the other way. Whenever you get a third, when a subsequent lower divergence and the small triggers are going down, it almost always goes the other way. Almost, I mean, probably what, 75, 80% of the time? Very rarely does it say, oh, we're going to go anyway. And that's really what we're trading on, what happens 75% of the time. Now, ultimately, The first trade that you're going to do as a new user with Nexgen is a trend trade. And we've dedicated a hell of a lot of resources and time and education and videos, and everything that we do is dedicated to Nexgen's trend trade. Once you learn the trend trade, you actually know all the other trades, you just don't know it yet. Um, in the trend trade itself, we have to make sure that we have a good top or bottom before it happens. Now, in the user guide, there's a page called the first 30 days and beyond. And there's a video that talks about the edges, the tops and bottoms. And it's a really, really, really super important video for new users. So if you're brand new, please watch this video after you get a couple days under your belt of the basics. Because if you have a good top or bottom, it means that you're going to make a lot more money on whatever trade you do. And for those of you guys who would like a list of what I think are the most important videos, pretty much in order, this is it. I put a list together for you guys. And then I put a little description. These first four are in the user guide, but it still just kind of make it a little bit easier just so you don't have to guess. So these first four videos are out of the user guide, but they're in order. Just watch them in order. And then the next 7 videos, there's a lot of videos, but really in-depth teaching and training and lots of super goodies. And then trade examples of the different types of trades we can do. And these are short videos down here. One of the other resources that you have at your disposal, which, again, just kind of going through and showing you what you have at your disposal. From the live portion of our YouTube page. So if you go into the live, what you're going to get is all of our classroom recordings. So if life is busy and you're not going to be able to attend the class, you've got hundreds of them recorded. So, and what you'll find is that the first hour of each of these is about the same every day, where it goes through the basics and trend trades and all that good stuff. So, again, one of the other things that you've got at your disposal is a playlist. And in this playlist, there's one of them called a 60-second video series. And in this 60-second video series, we have basically put all of the teeny tiny little lessons that you need to learn into a 1-minute video. So, trend trade short, trend trade long. That one's 16 seconds. I don't know how the hell that happens.
Monday through Friday in our live Discord class, we talk about taking the high probability trend trade, explain the rules, how to enter, and how to exit using our automated Fibonacci areas, not only for entries, but also for profit taking.
Anyway, that's 16-second trend trade video, just to give you examples of, what it is you're supposed to be doing. This one, trend trade short. Yeah, there is no. All right, we'll dub some sound over it. Anyway, the one thing he didn't do also, my brother made that, is he didn't show the large chart that said we were going down, which is a problem. Anyway, I can't control them. Anyway, defining market trend. Where do I get into a long? Where do I get into a short? How do I study my trend trades? Day trading made easy. I haven't watched that one. I need to watch that one. Large time frame analysis. What is a pivot stop out? What's a top or bottom or termination area? What's a 50-50 look, which you'll hear? What's a gap theory? So these are very important, not only to get some of the basics down, but also get some of the terminology down. And then ultimately, there's another 100,000 hours worth of video on there, which again, it's overwhelming how much content we have after 27 years of doing this. But just the content that we've produced in the last few years it's so much you can barely even take it all in. The nice thing is it's mostly repeating the same thing over and over and over. Top or bottom, strong triggers, nothing in your way, buy or sell a pullback. That's a trend trade. So again, all trend trades start with this look. If you don't have this look on your big charts, you're not doing a trend trade. Period. So just to make it easy. One of the other things that we talk about, rule number 2 in our trend trades, and I think everybody, look, unless you're really, really challenged, triggers going up or down, if anybody has trouble with that, see me after class. I will be more than happy to explain what triggers going up or down means very slowly. I think everybody gets that. Once you start layering in the second part of it, which is how far am I to the next area, I don't think it's a difficult concept. If you're going to sell a pullback on your big chart, you have to look at your big chart and say, where might we be going? Where is the next line on my chart? Remember when we talked about support and resistance areas and we have to analyze what the triggers are doing? So, and as we analyze, obviously the triggers are going down and we pull back into resistance and we go short, and then ultimately there's nothing in the way until we reach Fibonacci support, which is one of our better looks. Right? Whenever you have this much room between your entry and the target, you're going to make a ton of money most of the time. Doesn't always make it all the way, but most of the time it does. So the more room you have to a target, and this is where a lot of new users will say, I'm taking, I'll see people take 4 or 5 ticks on their first half just because it feels good. Don't do what feels good. If it feels good, it's probably wrong. Do the uncomfortable thing, which is to sit back and wait for your target or some condition to take you out of a trade. Again, room to a target is from the entry window to the next Fibonacci lines. And again, just because we have targets doesn't mean it's actually going to stop there. It just means that's a profit target. Because remember, the two things that we have to do when we get to a target, we have to analyze trigger line strength, which is very strong. And then we have to analyze location. And what happens a lot of times is you'll go long and get out at resistance, which is fine. But then resistance breaks and the triggers get past it and we're able to go long again. And that's basically the short version of what we do all day long. Look for this look, buy support, get out at resistance. If resistance breaks and the triggers are past it, do it again. If not, don't. Right. Speaking of which, I'm going to take my first attempt at swinging clubs in months today. Went and had 8 facet joints burned in my back 2 weeks ago. Starting to finally kick in. Anyway, that's a whole nother matter. One of the other things I think that bothers new users is the concept of selling the market when it's going up on the small chart. And again, remember, to make this tail on the big chart, you've got to have multiple bars to the upside on your small chart when you're doing trend trades. And then ultimately, we want to sell as high as we can into resistance, so when it does go down to the support on the big chart, we make a lot more money. Right. So again, when we're buying support, right? This was the basic rule number 3, which is where the hell are we going to get into a trade? So again, we have to have momentum in our triggers, some type of support to buy, and then some type of resistance to get out at. And again, this is literally the perfect trend trade. Right? And again, you're going to get a lot of these every day on every market, whether it's gold, crude, S&Ps, whatever. It doesn't matter. This is number 1 rule. Small triggers outside of the large, price bars above the large triggers, buying a pullback to support. which also happens to be multiple areas of support on our smaller chart. This is the ideal number one, A plus, perfect, perfect trend trade. Multiple areas on the little chart, everything strong on the big chart. 7 out of 10 times, you're going to make a shit ton of money with that one. And every once in a while, they'll get you, but it's okay. So if you're a new user, this is your look. This is what you're looking for. Everybody give me a why in the room if you understand it. I just want to make sure. I'm going to give you this picture. It's in there, but that's the number one look for a new user, period. You just wait for that look every time and you'll make money most of the time. I don't even know what he's up to. One of the other things that you're going to see, which we added into this document, is something that, the reality of life is that everything's not going to be a perfect trend trade. And as you spend more time with our software, you'll see that sometimes there's what's called a big spread or a gap in between the two larger triggers on your smaller chart. And you can't just get in at a spot when both sets of triggers are not together. And again, when you look at this one, hopefully you see how on the smaller chart, the larger triggers and the synthetic triggers are all coming together at the same spot. That's ideal for what we do. What's not ideal is when the large triggers from the little chart are super far away from the synthetic triggers from your bigger chart. And what that usually means is you need to wait for a bar up, because you don't know whether it's going to be the mid band or whether it's going to be fibs, and it could, the bar up could come from down here or the bar up could come from here. You don't know. So this is where, again, it's important to have a bar up, because then you can place your stop below the up bar, and then you can decide how you want to manage it. So split triggers. Now let's talk about stop placement real quick. The number one rule is to put the stop where the market should not go. And this goes back to chart reading and being comfortable that you're understanding what you see on the charts. Bear with me 2 seconds, guys. I'll be right back. 2 seconds. Okay, sorry about that. Whenever we're going to be taking short trades, we want to make sure that we place our stop above all of the trigger lines and areas. And then whenever we're going long, we also want to make sure that that price has to break all of the areas to come get us. So we don't want to put any easy money offerings up by having our stops too tight. Once we actually get the area to hold and we get an up bar, then we can move our stop up a lot tighter. Everybody okay with that? So you basically put your initial stop out of the way, and then once you get a down bar, you can bring your stop down and tighten up. Now, one of the other things, and again, I told you management is one of those things that is, it takes a lot more work. So let's just say, hypothetically, you bought Fibonacci support with all of the triggers and everything right here. I think we can make a case for that, right? If we get an up bar, you're going to put your stop below the up bar. And if they take it out, you're going to lose. And it's very important not to have your stop way down here and lose a lot of money because if this breaks, it almost always goes a lot further. So this is an exit no matter what. If you get a pivot, put your stop below it, maybe one or two ticks, and if it doesn't go up, that's it. Everybody okay with that? Again, simple concept, but I've seen a lot of people lose a lot of extra money for no good reason. If these small triggers are against you, we had talked about a second lower divergence is going to end the trend. And this is the example. I mean, you can find 150 of them in a week, easy. Maybe 500 of them in a week on the NASDAQ. If you get divergence, it doesn't mean that we won't take a trade. We'll take a trade. But if we get a second lower divergence, you better get the F out as fast as you can. Is that plain English? Hopefully. You have to get out as quick as you can because, and traditionally we want to put our stop after where the second bar would happen. Because if divergence happens, you don't want to have to try to get out. You want to be stopped out of your position. So this is where we use the little reversal bar marker on our chart to say, hey, if we make 2 bars down, we're done. And then ultimately we're like, whoo, thank God we got out. And sometimes they will take out the low and then they'll close back above the triggers and then we'll get a second shot at it. 75% of the time we won't, 25% of the time we will. So again, we can be ready for it either way. Again, just showing you the pattern. 2 higher divergences with the small triggers up. No matter how good the area looks, it's probably not going to work. It's very, very, very consistent. Now, this is where management gets trickier. If you get a second divergence, but the small triggers are still down at that divergence, it's probably not going to end the trend. You hear that subtlety, the difference between those two? If the small triggers are down and you're short, you can probably still hang on even if there's divergence. Hard to do because it's like, oh my God, a divergence. Because again, the difference is small triggers, small triggers, small triggers. If they're up, it's over. If they're down and you're short, you may opt to hang in there and see if it makes it to your targets, 1 and 2. Very, 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 very important. Very hard to do. It takes a lot of repetition to get this management part of it down. Again, if you go short in an area, this is kind of into a termination condition, but let's just say you go short into an area. If your small triggers are crossed against you, you have to be careful that, not to give away all of your money. And then ultimately, if you have multiple reasons on your chart why it's not going to go any further, like fibs, mid bands, small triggers up, high volume areas, there's a lot of lines there, probably not going to go. Now, the other thing that we talk about is exiting half of a position. And again, you guys can read through this, and this is all, I don't want to confuse anybody. In the user guide, it's all in here. Trade management techniques on this page. All of the trigger line information. All of the Fibonacci tops and bottom areas. All of the trend trade entries and where to get into a trade. All of this stuff is in here. And then we've got the new version, which I think is going to be a little simpler for new users. Just because it's laid out a little cleaner. I'll give you guys a link if you haven't seen it. We break it down into sections, so I think it's not as overwhelming. Anyway, same info, just prettier. Also, if you hover over the YouTube, we've also got YouTube in Spanish. So we've got our videos translated into Spanish. Lots and lots and lots of videos if you do speak Spanish as a first language. All of this stuff has been done for you. We also have a user guide in Spanish. So if you do speak Spanish, huh, I guess we forgot to do that sentence. Anyway, there's a lot of resources. I didn't mean to get off base. We were talking about exits. If you're long and you hit these yellow lines, take some of your money. If you're long and you hit the yellow dots and there's divergence, it will usually terminate the trend. So any one-to-one or fib with divergence is much more serious than no divergence. If you are short and you reach all of the blue lines, get the hell out. Remember when we talked about location of the triggers relative to the blue lines or red lines? So if you get to a blue line and there's no chance that these triggers are going to get below it, you may get out of the position. If these triggers were pushing down at or below the blue line, you might hold on for an extra runner. When they're located well above a blue line, the blue line's going to hold. Remember that lesson? Same thing when you're doing management as when you're doing chart reading. Now, not to scare anybody, but it takes a little bit of time to get used to looking at your chart and saying, okay, this is where a trade is, this is an exit, and then I shouldn't be doing anything else until everything lines up again. So this is the hard part because there's nothing to do over. There might have been a long over here that ended. There might be one short, and then there's a lot of time where the market moves a lot, but it doesn't line up perfectly. So again, just remember 90% of your time is going to be sitting on your butt. And then ultimately, exiting half of your position at lines on the chart. And you can always re-enter if you get another signal and get back into all of them. And then same thing here. Divergence, short signal, exit at a divergence line. Now what you're going to find is that there's two different scenarios with this. If the large chart triggers are incredibly strong, this isn't going to end the trend at all, most of the time. If the large triggers are weak and inside of the other triggers and not really very strong, this second divergence can end the trend for you. So you may take a full exit. So it just depends on what the large chart is doing, whether you're going to hold on for dear life or not. And then ultimately we had talked about this one. This is a reminder. If you're short and the small triggers are still down, a second divergence probably is not going to end the overall trend. All right, questions. I know there's a whole bunch on there and there's a lot of stuff, but we'll start getting into, trading plans. And we're going to watch the market today too. I know it's 10 o'clock, so. What do we have? Crude oil news today. Let's see what we got here. I already know we had some news this morning at 8:15. So we had non-farm employment change, which was 143K. A little better than expected, but not much. A lot of the FOMC members are speaking today, which, again, if somebody says something really crazy, then the market can kind of go insane. But these are not the things I worry about when these guys are just speaking. I just trade the charts. If you do trade crude oil, we've got crude oil inventories at 10:30. The challenge with crude oil, and I haven't watched it, but I'd have to say it's probably pretty volatile with all the bombs going off, which is horrifically unfortunate, but when bombs are flying in the Middle East, crude oil gets volatile, and volatility is good for traders. I don't care for that, but anyway, it is what it is. And then ultimately, now we can kind of watch our charts a little bit and we can ask ourselves questions like, was there a trade to go long? You know, did we have a pullback to an area that potentially could make it go up? And then, do we have another potential area here that's going to make the market go up based on what our large chart says? And the answer is yes. It should go up based on what our larger chart says, and more often than not, it's going to get to resistance. So, this is one of those situations where if you were long either here or here, this is an example of that divergence that ruins the party. Can you see it? So we had talked about this just now, so it's nice to see it in a live market environment. So check it out. Divergence, but that one's not as scary. This is the divergence, the lower divergence with the small triggers going down that will end the trend to the upside temporarily. The big chart says we're still going up, but this will end any long dreams that you had until this rolls back over again. Remember in our termination conditions section, we said 3 divergences in the same area? And more specifically, a second lower divergence is one of those very powerful tools that we have at our disposal so we can see what's going on. And you can see how quickly we changed here. So we didn't quite get the resistance. We will. Probably. I almost said that absolutely, didn't I? It doesn't have to do anything, If we reach this area, we have to assess 2 things, right? Number 1, strength of the trigger lines. Every line that we get to, guys, it's the same thing on your big chart. I like the Nasdaq because it provides a lot of opportunities. So when we get to this area, what do you guys see as far as trigger lines go? Well, they're down strong, but where are they located? I mean, each time we got to this support, 3 times. Is there any reason to think that support's going to break because of the location of the trigger lines? Now, I think we may have one more little push, but at the moment, the trigger lines are not committed enough location-wise to cause us to think that it's going down from support. So if it's not going down from support, what's the other choice? Well, the NASDAQ will answer that question really quickly. Right? So, and again, this is what we talk about when we talk about chart reading. Right? You have to be able to look at your chart and go, hey, support ought to hold. So that's the first half of the equation. Now, we have to ask the same thing right here. So, number 1, give me location of the triggers. Half of them are beyond the line, half of them are not. Would you guys agree with that scenario? So half are below, half are above. Now, that's what we call a 50-50 look. Let me give you a picture. So look, a 50-50 look doesn't mean it's odds for a trade, okay? I just want you to understand that. A 50-50 look means half of the triggers are above a fib, half of the triggers are below a fib. And it's really important to look at our smaller chart because it'll tell us whether we should go long or short, whether we should take a trade or not. So this 50-50 look, if there's divergence of any type on the small chart, will usually fail and go back the other way. If there's no divergence on the small chart, it'll usually keep going. Is everybody okay with that? You'll hear this a lot over the course of your Nexgen career, 50-50. And then you can see down here at the bottom. Another 50-50 look, and again, when you get a 50-50 look, it's a small chart trade. If the small chart says go, you can go. If the small chart says no, you can't. So this was our 50-50 look, which is now not 50-50. Welcome to the NASDAQ. And then notice, look, right here at this moment in time, we broke out of everything to the upside. Agreed? All triggers were up above the fibs. All triggers are going up. So the anticipation is that we're going to be going higher. We also had divergence with our large triggers going up from the midband. So all signs were pointing to going higher from divergence at the midband, the large triggers crossed up, the small triggers above it, finally getting above all of these things. And, again, we have to assess support. Is support potentially going to hold or break? So we have to look at two things: location of the triggers at the edge of fibs, and then strength. So when we assess trigger line strength, what are we talking about? We're talking about where the bar is located. So two things. We're talking about where the small trigger is located relative to the large. Are they above it or not? No. And then now we're talking about the bodies of the bars. Notice that the majority of the bodies of the bar are below the triggers. So when it was easy to go long 3.5 minutes ago, notice where the bars were. You took a long for 500? Awesome. So notice where the bars were relative to all the triggers. They were above them. And then over here, notice where the bars are located. So the bar location does matter, right? Notice the bars are below the triggers. So we have weak triggers. We have the edge of fibs. And there's no momentum to really take us any higher. And that's usually where the market will put in either a retracement and or reversal. So far it's looking like a reversal, right? So would you guys agree that we have the potential now of resistance holding for us, or some type of pullback holding for us? What do you guys think? Location and strength. So again, this is a look that we'd probably start thinking about the potential of a trade setup. And again, when we talk about trade setups, what are we talking about? We're talking about pullbacks into areas with triggers helping. So that would be your entry spot for a trend trade short. And then that would be your first profit target right there. Doesn't that look like it's right out of the user guide? I mean, that's about as right out of the user guide as you can possibly get. Did you guys get that short? Hopefully. And then look, once we get to fibs, we assess trigger line location, bar location, strength of the triggers, divergences from fibs. These are all things that cause the Fibonacci support areas to start to hold, which is fine. It doesn't mean go long. What it means is don't go short anymore. You got some? Cool. You're stuck in your thinking? When you have real-time market narration, you do really well. All right, nice job. Up $2,000. Nicely done. So, Elvis, that just tells me that chart reading is something that needs to be worked on a little more. All right, look at my small chart, guys. What do you see? You see it, right? Divergence from support, and then we have a higher divergence with the small triggers going up. that's our first indication that we've put in a pretty good bottom on the smaller chart. So, again, anything above this area, right? This area right here is probably going to start being an opportunity for us to think about long trades if we get them. So call it 32, 33. We may not even make it that far, but so again, look, we get to support. Price bars are above our triggers. Multiple divergences letting us know, hey, we may be going up. And lo and behold, and again, look, as we pull back into the triggers, do you see the split triggers here? See how this is an example of the split triggers that we were talking about, where the large triggers are way above the synthetic triggers. And again, that's traditionally a look where maybe you're going to get in a little bit later to go long. And now we've got three divergences in this relatively tight area, which is one of our termination conditions. I don't think it's going to terminate just because of the large chart. Before you start looking at the little chart, always make sure that you're looking at your large chart first. Is there any reason to look at this large chart and not think, it's either up or nothing? I guess that's a good way of saying it. It's either up or nothing. Sure. Hang on. Accidentally closed that PDF. If you guys have any questions about anything I go through, just ask. I literally will stop life as we know it, and you and me will have a private, personal, one on one conversation. This is not a sermon, it's a conversation. And I know I was kind of giving it to y'all at once, but in this PDF, Abdul, there's split triggers. So the large triggers from the big chart are down here. The large triggers from the little chart are down here. So in this split trigger scenario, because sometimes the long trade happens from here, and sometimes it happens from here. There's no way of knowing. It's not an easy look. So this is the split trigger look where you want to wait for some type of up bar, either on your market flow or this smaller chart, before you get into a position. Does that make sense? So this is one of the, there's two different ways you can get in at the area, which look, I love getting in at the area because it makes the most money. But to get in at the area, you want both large triggers, the large triggers from the big chart and the large triggers from the little chart to be in the same area. I think that's a really good, let's talk about that one more time. If the large triggers from the big chart are in the same areas as the large triggers on the little chart, plus all the Fibonacci lines, plus momentum, you've got a really good chance. In this situation or the split triggers? Sorry, I just want to make sure I'm being correct. What's the deal maker? In the split triggers, up bar is the deal. Have to have an up bar. Because 50% of the time they're going to go down here and give you an up bar, and 50% of the time they're going to be here and give you an up bar. And I don't know which one it is, and there's no way of knowing. So you have to let somebody else decide which one it's going to be, and then you just tag along. Yes, split triggers are the smaller charts. I mean, this is nothing more than the large trigger from the big chart. right? This synthetic trigger, all it is the value of this large trigger from the big chart superimposed on the little chart. So when all things line up, you have a higher probability of the area holding. Does that make sense? And look, go back and study the split trigger situation. We can go back and find 50 of them. And again, once you start seeing it, it becomes pretty clear. All right, so let me ask you a question. Fibonacci resistance at the edge. Give me the quality, strength, and location of the trigger. Should Fibonacci resistance hold for the moment? It's yes or no. I mean, it did hold, so it's a little late, but as you were trading into that area, you can see that the location and the strength said, we're not going up yet. Now, that can change. They could break above that line, and everything can change in an instant, especially with the NASDAQ. So right here, right now, this says absolutely freaking not. We're not going up. Which just means we don't want to take any long trades, which there are none. Now, some people will say if there's resistance and it's supposed to hold, we'll start looking for short trades, which I don't think is a bad idea. I think we have a little bit of work to do to get past this mid band, but once we do, we should be free and clear for taking trades to the downside. Until we reach prior low. And again, look, we're going to talk about strength and location of the triggers. So, again, anytime we reach a divergence low, you guys tell me what you think about strength here. I think the strength is overwhelmingly still negative to the downside. So I wouldn't be surprised to see, something like the mid band and over here actually causing us to get some type of short trade. Now, this is a termination condition. So, in order to trade into a termination condition, you better have a hell of a lot of good reasons. And again, watch. Here, we'll do one.
Order
I'll go
filled.
short. What's going to get me out, guys?
Stop filled.
Well, that was really quick, but remember we had talked about this. And again, I'm not saying it was the best. I'm on Sim, so I'm just showing you. But if you go short, what gets you out of a position? A higher divergence that says, the market will generally go higher. So, again, that second higher divergence is a killer. Number one, we also had a pivot stop out here, so I shouldn't be going short. Right, termination condition. But number two, if you did go short, you would have to manage out of that position if you get a second divergence. It's higher. And then ultimately, look, chart reading on the big chart. There's no reason to think we're going up yet. This area, here, but probably more closer to the resistance, somewhere in this window, still has a really good chance of holding. So they're going to have to do something significant to break out and make it go up. If not, what happens is, they'll test this area and then I'll draw the future in for you. So that's usually what happens. Now, they could break the fib, but chances are they like to go push down one more time and go test blue Fibonacci support. We'll find out. This is the test of how strong the market is right now. So again, resistance areas combined with trigger lines that suggest we're not breaking resistance yet. There's no easy short trades. Let me look. I just want you to see this. Everything is green here. So we're not going short. We're just waiting for, well, we may get it.
Connection lost.
Okay. Now we've got a clearing of support and resistance. So this support right now has both triggers above it. Everybody agree? This support has 50-50. Remember we had talked about a 50-50 look, and divergence is one of those things that will cause a 50-50 to be a little bit more difficult. So usually 50-50s end up getting back to the lower area because this lower area is not 50-50. And yeah, that may be it. We may have seen the bottom. And then, look, ultimately, look, if you go
Order filled.
long, what's going to get you out? We're either going to go to the next Fibonacci resistance, which I'll put a target up in there, or if we get a pivot stop out and divergence, we'll get out of that position. And if we don't, then, so look, I'm basically break even at this point. And, look, generally I'll take one off at a couple $100. So let me put a
Order
limit
submitted. Order cancelled.
Oh, doesn't matter. Anyway, we should still be going up. I probably shouldn't have gotten out, but it's hard to teach and trade at the same time when the NASDAQ is really quick. But look at your large chart. We're going up. Look at your small chart. We're going up. Everything says up, and up it went. Yeah, 2 divergences isn't bad. Cindy, let's go through this one more time. In the trade management techniques. Right? We kind of talked about this already, but we'll talk about it again. I'm just looking for a picture. Where the heck did my picture go? I'm looking for one specific picture. Ignore divergence. Now, this is an old picture. This is from 2021. But this is how long it's been since we've been trying to get people to ignore divergence. Do not let divergence force an exit if all the triggers remain strong up or down. And sometimes you're going to just lose sight of it and get out, and then you'll be like, damn it, I got out and it went without me. Like me just now. I'm not focused on trading. I'm just trying to focus on teaching. So again, analyze the divergence and the small triggers. So let's do it together. Tell me about the small triggers with divergence. Are they up? Yes. Tell me about the small triggers with divergence. Are they up even further? Yes. It means that we usually will go long again. And then ultimately, look how stupid my exit looks. Look at the divergence and look at the triggers, and is there any reason to think we're not going up? Now, I'm on Sim. I screwed the pooch on that one. I didn't make any money, but that's okay. But I should have made a ton of money if I was focused up and actually doing it right. And look, I did it wrong. There's no excuses. I read it wrong, I did it wrong, and then I made no money. I didn't lose any money, but I didn't make any money. So instead of making all of this, which, look, that's a significant sum of money in the NASDAQ. That's 28 points, 25 points. That's $450 right there. Just that one little move in, 1 minute. That's a lot of money. And then, look, if you don't like the NASDAQ or you don't like what's happening, just wait a second because it will change. And again, let's start with our big chart. And again, let's talk about divergence with weaker triggers. So the triggers got weak, we had divergence, and then the triggers are going down. So there's no reason to think, we're going to go long again. We only want to go long when the triggers are going up. So again, going back and looking at where the market went up from, pretty easy read, right? And then we broke above resistance and it gave you a second chance. And then ultimately, the thing petered out right here in the middle of nowhere before reaching the next resistance lines. Which means sometimes they'll come back down, and they'll start over, or they'll just keep going. I guess we have crude oil news in just a couple minutes, don't we? Anyway, do you? I went through this lesson yesterday. Um, Give me your read on resistance right now. Hold or break? Short term, probably hold, right? Location of your triggers relative to the fibs. And again, there may have been, a little pullback short right there somewhere. We do have news in 7 minutes for crude oil. So if you're a crude oil trader, heads up. Now you can see how they're battling right here, trying to figure it out. Could they break and go up? Sure. If we get to this resistance, the read is still going to be the same, that resistance should hold. There's nothing on any chart that we own right now that says you should be going long. Can we agree with that? It's short or nothing. Now, one of my favorite lines is in our termination condition section. I want to show you this. This is one of my favorite pictures I've ever made. I made it back in March of 2021. But it says, because here's what happens, okay? People go, well, if the large chart looks so good, why the hell do I need a small chart? I'm just going to trade my large chart. Have you said that to yourself? You're like, well, if the large chart looking perfect is what I want, then I might as well just use the large chart and I'll just forget about the small chart. And what happens is, with this dynamic Renko bar structure, you cannot see change happening on the large chart inside of one bar. This is why it's incredibly important to pay attention to, second lower divergences, red backgrounds, pivot stop outs with divergence. This is going to, look, it's okay to go long at support when the large chart's up, but at some point you're going to get a termination condition. 1, 2, 3 divergences, or pivot stop outs, or wrong side of the triggers. Something on the small chart is going to save your ass from hanging on for dear life forever. And that's the reason why you have to get both charts read perfect. And it takes a little bit of time. It's like, can I go long? Yes, I can, but I should be out. All right. Elvis, let me look at your picture. So you had divergence. So you had a divergence, pivot, stop out, and then somewhere over here you see long trades. I think it's right. And $3,200 on Sim. Nice job. All right. So short version is resistance did hold and go down. And like I said, this is the spot where we have to look at our little chart and say, what happened? Right? Our triggers were, look at the condition of our bars versus the triggers, and our triggers versus triggers. See how the small triggers are physically inside of the large triggers? That's very weak for us. And the other sign of weakening is price bars above the triggers, the bodies of the bars. Not that it can't go down some, but it's probably not going to go down forever because there's not enough momentum. And then, sure as the day is long, without any momentum, the market goes up and goes the other way. And remember, we had talked about resistance at the mid bands is going to be a key area for us. And look, I don't know if it's going to hold or break. I don't have to know. I have a good idea that when I look at the strength and momentum of the triggers, it has a chance to break. What do you guys think? It's just a bottom in the middle of nowhere. So again, I wouldn't classify it as anything good. It's just a bottom. But with the momentum and breaking of resistance, that's a good look. So it doesn't have to be a good top or bottom at all times, Kurt. Sometimes it can be a breakout. A breakout is just as good as a top or bottom. So again, when we get to a breakout, is there a trade to be had? This is where, in the NASDAQ, you have to have a momentum trade component to your trading plan. And again, this is where I bring in like a market flow chart. One of my favorite momentum trades is both triggers going up really strong with a down bar into support. And this would be, for me personally, one of my momentum trades to the long side, which obviously would have made a whole bunch of money. Now, I haven't gotten into market flow or any of the other charts yet because obviously. Now, remember when I said you can't see change happening on a big chart? This is literally that exact same picture 4 years later, 3 years later. Multiple divergences, multiple pivot stop outs. It looks like it's going up on the big chart, but it's not really anymore because the small chart hasn't given it up. I mean, doesn't that look literally exactly the same? I mean, I think it's pretty damn close. Not exactly the same, but the difference is these triggers are a little bit weaker. But once you get 1, 2, third divergence, fourth divergence, I mean, that's as good as software gets right there, guys. This is why you pay us for software. Because you have a really good idea where it's going up from at support, and then you have a really good idea when it's not going to go any further. That doesn't mean it's forever. It just means temporarily it's not going up. Now look, we have divergence from the mid bands, which I love. And we are working our way back above support and all of these areas now that can possibly hold and take us up to the next Fibonacci area. So look, I already know that the next target is 21. 1450 on the first half and 21 on the second half. So again, can we do some type of trend trade or momentum trade or something along those lines?
Order filled.
The answer is yes. And then we say to ourselves, sells, where are we going? We're going up to fibs, prior divergence highs. Everybody understand this? Everything's going up and we know where we're going. So I was going to take one at, well, let's see if we get another up bar here or not. This might be the end of it. If it doesn't go up right now, it has to go up. Not going.
Stop filled.
All right, that one didn't go all the way. And again, it's okay. It's going to end up going eventually. So you can always take a second chance at it, which, again,
Order submitted.
as we start to close back above our trigger lines again, I'll take a second shot at it and see if they're nice enough to give it to me. Good God. Welcome to the NASDAQ. Probably hesitated just a half a second too
Order
long,
canceled.
but you see it, right? Divergence comes down. We had a momentum trade, which momentum trades are fine. You just have to get out after you lose momentum so you don't lose a lot of money. And then you end up with trend trade. And, again, when we get a trend trade, this window right here is going to be our significant window. We have to ask ourselves questions, right? The first question is, and we should make it up to, what did I say, 21? We'll see. They're starting to struggle here. Do you remember down at the bottom we had a pivot stop out over here? And we talked about not going short anymore because of the pivot stop out. And we have the exact same thing now at the top, which I still think they're going to go all the way because they always make it to the fibs most of the time. But anyway, once we get to a top or a pivot stop out, it becomes more difficult to take long trades. Not that we won't make it to the spot, which we did. It just becomes a little more difficult. All right. Now, no reason to think we're stopping yet, is there? With the strength and momentum that we have going up. So at the moment, we're probably going to get one more push to the upside. We'll see. Maybe not. Crude oil, you're talking about, Kurt? Yeah. All right. I don't have any crude oil charts open. So I like the NASDAQ because it gives us a lot of opportunities to talk about what's happening, and you can see it more live and more repetitions. And if you don't like what's happening in the NASDAQ, all you have to do is wait about 12 seconds and it'll change. It's not a good market for new users. So if you're a new user and you're saying to yourself, hey, I really would like to trade the NASDAQ, get that thought out of your head. It's not the right thought. All right, so look, 50-50. We had divergence on the small chart, which means we're not going short, which means now we can resume the long trade again and go back and get the rest of our money to the upside if they're nice enough to come back. Right? So we have to ask ourselves, what type of trade are we going to do here if we get one? So can we pull back far enough to justify some type of long trade? And again, there's so much momentum to the upside that we may not get that much of a pullback. All right. Questions, comments, concerns, things you guys want to go through. And again, look, I'm looking right here as, the possible trend trade long spot. It's not all the way crossed on these triggers, but close enough. As long as we stay above this window, this would be the window that I would be looking at right here. So we'll see. Shall I leave that window on there? I mean, that's basically the window that we're looking at, short version. Whatever happens inside of here is probably going to determine what happens next. And it looks like we're going up. And it's not really a guess. I mean, the triggers are up. So this is kind of that split trigger look. They weren't even both. They're finally both up. Finally. The first time. And then Abdul, you see this? This is the split trigger look that we were talking about. So we have, a mid band here with split triggers, and then we have which again, I think will go lower because of divergence from one to ones. So getting to here and then having some type of close above the triggers would be the way to go long, which probably is not even going to happen now. So anyway, this is where the split triggers and waiting for the up bar saves your ass from trying to buy the mid band and losing and trying to buy over here and losing. And then, ultimately now we have to assess our large chart. We have blue Fibonacci support. What do the triggers say about it? Should it hold or not? It should hold, right? Because there's no triggers below it. So we're going up. So, again, can we do some type
Order
of
filled.
momentum trade from the mid band to see if we can get some of that up? Again, momentum trades are great until you lose momentum, and then, they're pretty much over. So
Stop
I'm
filled.
minimizing. That was the first attempt at a momentum trade. And again, I lost maybe $100 right there. No big deal. It was one shot at it, and that's it. Anyway, a bit of a cheat, market flow cheat. Just didn't go. All right, Ron C. Let's see what you got. The old chili dog. Did you or Mark name that? I'm just curious. All right, now we have divergence from a pivot stop out. Our fib should still hold. Now it's gone green. What do you guys think about a momentum trade for a second attempt?
Order
With everything
submitted.
going up this time. A little better opportunity for the momentum trade long. They're not coming back. Welcome to the NASDAQ, where they don't come back sometimes.
Order filled.
All right, so momentum trade to the long side. I'm not going to lose a lot of
Stop
money if it
filled.
doesn't go. God bless it. I'm a little too tight on that. Shit. I put my stop in the wrong spot. God bless it. Anyway, that was quick. My bad. It's still going up. Hey. Does everybody understand this? I am not doing well on execution right there. I was a smidge early and put my stop not where the market shouldn't go, but where it should go. And that's a really good lesson there. All right, 50-50 look. You know what we're going to do? We're going to take a little break. And we're going to take a breather. And we have a 50-50 look, but this is where I told you that the small chart is going to define what happens next. So look at the high on the small chart. See how that held? Divergence from one to ones. That means 50-50 is not working. So we're not going long anymore. Anyway, I'm going to take a 2-minute break, pause for the cause, get myself a drink. If you guys have any questions, I will be more than happy to go through them with you. Just let me know. And yes, if this area holds, there may be potential short trades. 22 is your number, give or take. 21, 22. Whatever happens at 22 is going to determine what happens next. And I think it's down. So I'll be back in a minute. Okay, guys, I'm back. I want to talk about resources for a second again. A lot of people don't necessarily use all of the resources that we make available, and we have a lot. One of my favorite sections is this chart reading section on Discord. And in this section, if you got to scroll all the way back up to the top to start at the top. But it talks about every look that you can possibly get on our software and what to expect, which I think is a very, 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 very important thing. Um, you know, Concepts like if we didn't turn from a Fibonacci area and then eventually the Fibonacci area holds, that we're going to go long after a pullback up into the resistance that we didn't get to the first time. That happens a lot. Um, we talk about the mid band getting hit and being a support area. We talk about mid bands holding, and then ultimately divergence. And if the market crosses down, you can go short to support. But there's so many pictures. And, part of what we had talked about, and we've seen this several times today, is the 50-50 look. And again, lack of divergence and lack of an area creates a bad high. And when you don't make a really good top and you have a 50-50 look, this is where you go to your smaller chart and you look for divergence or market flow signal long. There's a couple different things, but anything that's bullish on the smaller charts will usually end any type of 50-50 to the downside look. And I think a lot of new users get caught up in 50-50s. And it's not that you can't take a trade, but once the smaller charts with a 50-50 makes divergence, it's over. And then ultimately the trend resumes, and then you make the rest of your money that you were looking for. Anyway, there's so many pictures on here in the chart reading section. Trigger line reading section also. A lot of information is in here. Most of it's what's in the user guide, but there's some extra stuff in here. And then ultimately, we have a short version of, a lot of the education that we put together. Videos. We have a trading plan checklist. So a trend trade checklist, which I'll give you the link just in case you're brand new, so you can download this. Let me get back to our room, and then we'll look at it together. Let me download one. All right, bear with me. Get this out of the way. There is nothing that we have that there's nothing skimpy about the amount of documentation that we have. And don't let it overwhelm you. It's all the same thing. Triggers going up or down, buy or sell the area, make sure nothing's in your way. And it's, we made a little trend trade checklist for you guys that you can download. Here's a link for it. I'll just put it in the room for you. And when you have your trend trade checklist, if you're doing trades as a new user, you want to be able to say, okay, let me have a double check. Is the market coming from a good top or bottom? Yes or no? And there's a link to the video in case you don't know what that means. And you can take a trade without a good top or a good bottom, but you have to manage it and get out if there's divergence on your smaller chart. Just like a 50-50, if there's divergence, it ends it. If it's not a good top or bottom, divergence ends it. That's a really, really important management concept. And then it's just simple rules. Strong triggers? Yes. Do we have a termination condition? No. Are the indicators where we want to buy or sell inside of favorable large triggers? Yes, then we go ahead and take a trade. We got a couple examples. We have a million examples, of course. And then we have stop logic. 9 to 13 ticks on S&P, probably 24 ticks. On my plan, I've got 24 to 28 ticks on the NASDAQ. It's a little more volatile. Range charts with or without market flow. Again, 13251, 8 range chart. If you're going to do a market flow chart, which we haven't spent any time on, which I will if you want me to. And then profit targets. 150 to 200 bucks on the first half. Get your stop up to break even, and then ultimately take what it gives you on the second one is the way I like to do it. Manage your trades with higher, lower, or third divergences, which we've already spent a lot of time talking about. In a strong trending market with strong small triggers, you can hold through a divergence, which we already talked about. 50-50 trades or without a good top or bottom. Take half of your money off, get to break even, and exit with any divergence. And look, daily goal is 400 bucks a contract. So if you trade one contract and you make $400 a day, I mean, think about it. That's $8,000 a month. That's almost enough to pay the bills, isn't it? So again, we made the plan for you. You don't have to literally do anything except learn the plan, execute the plan. All right. You guys want to do a little bit of market flow work? Let's talk about the market flow for a minute. In the user guide on the website, the market flow is an indicator that should only be looked at when you're trying to initiate a trade. It's not something that we watch all the time. More specifically, when we talk about the market flow, we're talking about a couple of different things. The most important feature of the market flow chart is the white paint bars. And again, this is a range bar chart, a 21 range, which means, this is what I use on the NASDAQ. It's usually 8 on crude oil or S&P. And what that means is that the high to the low of every bar is 21 ticks. Everybody okay with that? And the white paint bars show us a shift in the buyers versus the sellers. So when the buyers are going up and the high volume areas inside the bars are going up, there is no white paint bar. When we have lots of sellers and magenta dots in the bars and the high volume areas are lower, and we start closing below, we get a white paint bar to the downside, which is usually a signal that potentially we're going down if it's from a topper. And then ultimately, if we make a low and we get a white paint bar to the upside, there's a potential that the market keeps going up. Everybody okay with that? The white paint bars just kind of show us the shift in volume. That's all, no big deal. Now, if a white paint bar fails, meaning you get a white paint bar up, but the next bar is down, it will give you a short signal. And what's the most important thing if you're going to do a short signal? I've already given you the answer, but all of the other rules have to be true to do a trend trade. So if you were in your larger charts and you were thinking, hey, I'm going to be doing a trend trade short, but I need a white paint bar with a reversal to do it, it's kind of a swift kick in the pants. If you're not already short at the area, this would be a signal you could use to go short. Now, same thing is true to the upside. If you were at a trend trade spot on all of the other charts and you get a white paint bar down, then the next reversal bar will be an up bar for you. and you can go long. So that's the short version of um, what we're doing. The second thing that the market flow will do for you is, let me find it. If the market puts a good top in, right, then these magenta lines, which are created from the white paint bar itself after a subsequent bar down, these magenta lines will help you visualize. It's called our HVA trade. It's in the user guide, and it's pretty simple. You need a top, and then you need triggers down, and then you sell the magenta line and hang on. I turned off the yellow bar and quit using it, Cheetah. It's not necessary. I wrote it years and years and years ago, and you don't need it. So, forget about it. All my templates now don't have it. It's just, live and learn. The other thing, look, I wanted to go through my trading plan itself. And again, my trading plan is predicated on trading the NASDAQ, not S&Ps or crude oil, but you can use it on anything. It's the same plan. And look, the first part of my trading plan is exactly the same as the plan I gave you guys just a minute ago. Trend trade plan. Right? So the one that I gave you guys just a second ago, this trend trade checklist, same thing. Nothing is any different in mine than it is here. So, trend trades are trend trades no matter what market you're on. Where my trading plan differs is I start to look at top and bottom conditions. And I'm checking for one of three types of trades that could potentially happen from a top or bottom. I'm checking for a white paint bar. I'm looking for a momentum style trade or an HVA trade from one of those lines we just talked about. So the most important thing about trying to buy or sell after a top or bottom is that you actually have a top or bottom. So remember we talked about Fibonacci support or resistance and analyzing our trigger lines. So let me open up this picture for you. And this is where the market flow will ruin your life, and you'll be thinking that there's a short trade happening if you stare at your small charts. And then if you forget to look at your large chart first, you're going to end up losing money on the market flow. It's literally almost guaranteed. Let me save this real quick. So look, when we look at the large chart and we look at the trigger lines, should I be in a short position with these trigger lines going up? The answer is unequivocally no. And I don't like to necessarily put negatives in my trading plan, but this is one where I think it makes sense for people to see that if you don't have a good top or bottom, don't do it. So it's literally labeled, this is not correct, just in case so there's no confusion. Traditionally, white paint bar trades for me have to have a good top or bottom like this. So they need to have weak triggers. They need to have not really below the fibs. Price bars need to be above the triggers. Ultimately, I'd like to see a couple divergences on the small chart. And then, look, I can be more assertive at going long at Fibonacci support if the market flow chart allows me to. And then there'll be another long over here later, but this is the one, if you can get in really close to the top or bottom, and it is a top or bottom, you make 5x the money. Does that make sense? So, and again, you can't always get in at the top or bottom, but there are a lot of times where the market allows us to do so. And the other thing about doing HVA lines, I put this little warning in here, and you guys have this plan. I gave it to you. One of the horrible, horrible, horrible things in watching the market flow is if you forget about your trigger line location. And if we have Fibonacci resistance, but the triggers are physically above them, you're going to lose every time you try to sell one of these magenta lines. I mean, almost every time. Only when the triggers look correct and they're on the correct side of the Fibonacci resistance and the high volume line do you get a short trade that works. So, and again, same thing at the bottom. If everything's going up, the high volume lines work really well for long trades. If the triggers are beyond the area, they don't work. And then ultimately, it will work when the trigger line configuration is correct. So the trigger line configuration is the most important, a top or bottom plus the correct trigger line configuration is the most important thing when doing high volume area trades. Again, if you're brand new, that's too much for you. Don't worry about doing high volume trades. Worry about doing trend trades first. The other thing that, again, I use a market flow chart for a lot of my entries. And a lot of my entries are momentum style entries, especially on the NASDAQ. And what you will find, a vast majority of the time, is that when you have a lot of momentum, let me make this picture so I can make it bigger for you guys. And again, momentum is pretty easy to see, right? Everything's going up on this chart, the big chart. Everything is going up on the middle chart. And then ultimately, my rule is I want to buy on the way down if there's an area there when my triggers look like this. So again, when these two triggers are both vertical to the upside and trending together, I want to buy the area on the other chart after this chart makes a down bar. And then hopefully if it makes an up bar, I trail my stop behind the low. So ideally I'm getting in on the way down. The market immediately goes back up and then I have a very small risk to make, I might have 3 points worth of risk to make 10 or 15 points. So you end up with a 3, 4, 5 to 1 win-loss ratio when doing momentum trades. This is recorded, Abdul. I will post it later. And I got my audio correct today, so everything should be perfect. Does everybody understand this look? Again, it's trigger lines. Both triggers going up really, 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 really strong. And same thing on the other charts. Buy some type of support with the bar down, hoping for the market to continue with its momentum. And I've got a lot of these examples in my trading plan. A lot of these examples. We can go through more of them, but they all look the same. It's both triggers down, one bar up into resistance, make a bunch of money short. I mean, that's basically it. It's the same trade over and over and over, and it's the same look over and over, and that's why it's easy. Market makes in a bottom, second higher divergence, divergence from 1 to 1, strong triggers up. I get a bar down. I actually got in after the bar up, so I got in late, but it doesn't matter. So could have been in earlier, but I got in late on this one, and it still worked out fine. And again, you guys can go through these at your own leisure. Again, it's the same thing over and over and over. Strong triggers down, one bar up, and this also has a high volume line here, so it kind of adds a little love to it. So this is what it looks like at the time of entry. And then after the entry, it looks like this. It's one bar up into a high volume line and then one bar down. And again, ultimately, I was only risking a couple of points, and then you can quickly not even have to risk any money. Anyway, a lot of people love this trade. And again, you have to do it at the right spot under the right circumstances, and that's the part I think that takes a little bit of time to get used to. But again, all triggers trending up strong, pull back to one to ones in support. We have a down bar, go long, hope for the best. The other thing that this one up, one down does is I use it for trailing my stops in addition to entries. So again, if I'm short and I'm looking to trail my stop to a bigger target, each time I get a new down bar when my triggers are going down, I'll trail my stop behind the high. That's easy enough, right? A new down bar with both triggers down, trail the stop. And what you will find is that if you can be patient with this, it will generate a lot of very large trades for you that you may not have stayed in otherwise. So if you were not in a trade, you could also use the one up as an entry and then trail your stop after the down bar. Does that make sense? So it's a dual purpose look. It can be an entry and it's also your trailing stop. Anybody have questions about this? This is my favorite look. This is the easiest look to make money with, in my opinion, on the NASDAQ ever. Momentum on the other two charts plus this look, it basically cashes checks for you. Questions, or you guys got this? Say yes, I got it, or no, I don't got it. Say it again. Give me something. You got it? Cool. I know you guys got it that have had it for a while, but and again, if you're brand new to Nexgen, don't let this overwhelm you. This is something that you'll get into after month number 6, maybe. You have to learn the basics of trend trades, chart reading, trade management, right? You have to learn this first bit first. And then you can get fancy with it later. But I wanted to show you that there's a lot more to what we do. And, show of hands, who's up over $2,000 today? Just curious. Pete, you're over 2 grand. Gary, I know Elvis was over 3 grand already. Finme stopped at 800 bucks. Okay, 600. Cool. So look, if you can make $400 a day on one contract, that's $8,000 a month. We've been doing this now for 27 years. All right. If I was going to draw a picture of a textbook perfect spot for a trend trade, that would be the spot. It may go a little bit higher, but eventually this should produce a trend trade short that takes us to the downside. So there's your down bar. As long as we don't make a second higher divergence, this should take us to the downside here. If it does make a second higher divergence, it's the perfect look that didn't work. And that's what happens with the NASDAQ sometimes. It's very rude. Thursday last week, 1,700 bucks on 3 trades. You're not trading this week. All right. All right. So let me ask you guys a question. What would really make things nice on this chart? Do you remember how we said divergence with a higher divergence really is a powerful look? And look what happened. Divergence, higher divergence, triggers roll, and look how far it went up. And then now look what we have. We have divergence, and then we have divergence potential. So I don't know if it's going to happen, but if we make a second lower divergence, it's going to create a big move to the downside. I don't know if we will or not. We could test the high again. We could stop right here, but probably going to stop right here, just based on triggers. But if we get to the high, that's fine too. I don't care. But if for some reason they make a lower divergence, usually when the trigger lines are beneficial afterwards. So you don't know. You don't have to try to guess if it's going to happen. You just after it happens. Is that helpful? We don't know it's going to happen just after it happens. Usually when the triggers cross, it goes a long way. It doesn't look like they like the idea. All right, so now we have a pivot stop out of a prior high, which again for us is a termination condition. It means that no matter what, we're not going long anymore until that breaks. Elvis, 5 grand. Gina, 1,600. Cool. I just wanted you guys to, I appreciate you guys sharing that because I want the new users to know what's possible. That's really very important to me. So they know that, you know, there's money to be made doing what we do. Okay, so now we've got a termination of the high. The other thing that you should notice is that there's not one trigger line above 44. You see that? So, again, there's going to be a really big line in the sand at 43, 44 that if it tests it and fails, it's going down, probably going down anyway. Now look, divergence and a lower divergence. It'd be nice if the small triggers were going down here. If the small triggers were going down, it'd probably be short. Without the small triggers going down, they may still test this Fibonacci resistance area right here. And now we're about to find out what they think. This is either going to be a high or a breakout. I don't care which, do you? I mean, it literally makes no difference to me if it's a breakout or not. I don't feel, again, forget it. I hate to use the word feel. My indicators at the moment are not overwhelmingly strong to the upside. Would you guys agree with that? Small triggers versus large triggers versus price bars. It's pretty weak. And you can see we've got divergence potential. So they're setting up to make a second lower divergence. Which, again, we said this area is going to be significant for us, and so far, so good. And, again, chart reading 101 on that one was pretty easy. This is exactly what we talked about several times, right? The first high, we had strong triggers, so they go back up and test it again. And the second high, they have weak triggers, and the area holds a lot better. Now, we're kind of monkey in the middle here because we've got support that might hold, and we have resistance that might hold. which is a really good precursor for choppy markets. Now, because we have a second lower divergence, I'm still leaning towards 44 holding for us. But, until we have enough room to make a trade worthwhile, I don't think there's going to be an easy trade in here. If it wasn't so horrible looking on the big chart, I would do a long trade right here, which it may still work anyway. But with the large chart looking horrible and being at resistance, I wouldn't do a momentum trade long here, even though it's probably going up anyway. But that's my look for a momentum long right there. Watch. More specifically, let me show you why. And again, I don't think it's going to go very far, so. But again, look, we talked about this just a minute ago. One bar down on the market flow chart into some type of support on my little chart. You see where the circles line up there? That's my momentum long. It doesn't have to be yours, but that's my look for a momentum long. All right, very nice, Ron. I like it. Enjoy yourself. Anyway, you can see there's a little bit of money to be made on those momentum longs when they work out pretty easily. I didn't like the big chart. It was kind of ugly. Now the big chart's very, 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 very bullish. And we should continue to the upside based on our larger chart. So this area right here is going to be pretty significant for us. If we get a
Order
close above the
submitted.
triggers, watch. I'll wait for a close
Order
above
filled.
the triggers. That'll be our next long trade, and we'll see if they're going to keep going up. They should, but they don't have to. Let's see how nice they're going to be. Notice I put my stop below the pivot. If it loses, it loses. I have to still figure out where we're going. I don't have any resistance up here, but at the moment, I mean, this is the resistance up here, 2102. That's a long way away. So again, as long as I don't get a third divergence in the same spot, I'll stay in. If I do, then it's going to be a small loss, and we'll look to buy at a lower level. Does that make sense? You can see one divergence, two divergence. This will be the third divergence. And if it happens, it's freaking party over. So I've got limited risk. It basically has to go up from right here. It's not going to go. We got a new bar, so I can pull my stop up. Now, how far is it going to go? Who freaking knows? There's my first line on a chart. So that's a long way away. We'll see what happens. So if it goes that far, it's $1,100 bucks. And look, I normally will take 200 on half. So since I'm up 250, I'll just take
Order canceled.
plus on half. And then I'll get to break even plus because I'm not losing. And then this is where, remember, we talked about trailing stops using the market flow chart. So if I get another up bar, I will trail my stop. Look at the triggers. What are the chances of another up bar? Pretty good. There you go. So look, I'll trail my stop. I've now got a bunch of money locked in. We're going for higher. We'll see how nice they are about it. So we already took a couple $100 bucks plus on half. So we'll see what the market is nice enough to give us. That's 500. That's enough for a daily living, isn't it? I mean, I probably shouldn't even get out of here.
Target filled.
All right, that was a easy chunk of money right there. Anyway, long from here and out here. And there's no reason to be out. I mean, it should still be long based on that, but that's okay. Take the money, take the money, take the money, never hurt. So that was about what? 700 or 800 bucks? And how long did that take? 2 minutes? Does everybody understand the thought process on that one? It's pretty easy. Trend trade long from the mid band and one to ones. Couple little retracements against us, no big deal, and then very easily to the one to ones. Not bad, right? And again, you can put on. I don't like the markers on my chart because it's just obnoxious, but anyway, this is what I want you guys to do for me when you're annotating your charts. I want you to say, and you don't have to write a lot on there. Just put an arrow so I can see where you're thinking, and then put an arrow, and then first target, second target. That's all you need to do, and then share it to your screencast. And then look, when you guys are in the room, you can just copy paste it and put it like that if you want. All right, everybody understand that one? And again, look, for me, one of my termination conditions that tells me I'm not going to go long at the moment anymore is when I get divergence from one to ones. Just not my favorite look for going long anymore. So now we sit and wait until everything rolls up again or rolls down again, either or. Gary, let's see what you got. Okay. So you got in a little bit late, but everything going your way. Still pretty easy money. We'll call it a chili dog. That's Ron's trade. Mark and I, my brother actually, Mark, who runs the trading room, he actually named it. Here's his second one. He basically does momentum trades that break out in the direction. And he doesn't get greedy. He takes, 10 or 11 ticks, and then he's done. And he'll do that 2 or 3 times a day, and that's all he needs to live his life. 3, 4, 5, 600 bucks a day, and he's done. So remember when I said you're going to have to figure out what trade Nexgen teaches that fits your personality the best that you can be most consistent with. Because look, when you look at his chart, realistically, he missed the mother lode of all trend trades, and he doesn't care. So look at this right here. Do you see this look right here with the arrows? Every trigger is down on the planet, and he should have been going short up here at 40. And he could have actually made, $400 a contract with just a trend trade. But he doesn't care. He doesn't want that trade. He says, all I need is 4 or 5 of these a day where I have momentum and everything going and nothing in the way. Take 11 ticks 4 or 5 times, and I'm freaking happy as a clam. Again, those happy clams. Haji, let's see what you got. All right, so you were going long at the trend trade long spot, and you took your first target, and then you took your second target on the way up. Freaking textbook. I mean, literally textbook, isn't it? when the Nasdaq gives, it gives really, really nicely. I do have to say, I love the Nasdaq and I hate the Nasdaq all at the same time. It's a love-hate relationship because when it's going great, it's so awesome, and when it goes bad, it's not. And and that's part of the art form of when to trade and when not to trade with the market. You have to be able to see, feel, and anticipate that the market is just not behaving like this morning. I mean, I was down. I didn't even post it in the room. I was down $500 or $600 because I was doing the right damn trades, and the little dang thing wasn't working. And I was like, man, I got to take a break and go eat some breakfast. And then the market did right later. Um, again, when we when we talk about trading, I wanted to give you guys one more thing. You guys wanted a link to that seminar, and I want to go through it with you real quick. Just so I'm gonna post in a link. Um, this is a Nexgen approved webinar seminar where Janesh, Sophia are going to teach you guys the way they're using Nexgen and some other things. Um, Short version is it's 5 grand for it, but we're doing it for 37.50 for the first 20 people. The dates that are going to be that this is going to start, just to give you an idea. Bear with me here. Let me get dates. Jeez Louise, where'd I put them? And the way they're doing their seminar, they can do 8 people at a time, and that's it. Um, Bear with me here. So these are the dates of the next classes through December, just so you have the dates. Let me get here. And they're setting up a calendar thing on their site, but short version, this is again, I'm going to let you guys read through this, but they're going to look. NextGen has, in my opinion, one of the better technical analysis softwares on the planet. Our teaching and the educational materials, second to none. But there's other parts of it that we don't necessarily go through, and we don't spend a lot of time doing because it's not really the trader's mindset, understanding price action, how to develop analytical thinking, which if you already have it, then it's great. And if you don't have it, then it's going to be a hindrance to your trading. How to build your strategy, extra risk management, accountability practices, and ongoing mentorship, meaning every day somebody helping you out in a small group session. And again, basically, it's going to be a 5 day class, and it's long as hell. Sunday, 9 a.m. to 3 p.m. Eastern Time, 6 hours. So there's a lot of material that will be covered on Sunday. And then on Monday, they do 8 to 10 live session, and then a 2 p.m. to 4 p.m. live session. And then on Tuesday, 9 to 11:30, and then 2 to 4. And then there's a couple of days where they'll do live trading, and then the other days you'll do the live trading. And again, I think, the point of this is to fill in, if you just buy indicators and say, I'm a day trader, it doesn't always work. So if you find yourself on your 200th reset and you can see it, but there's something that you're missing. I mean, I've known Janesh for what, 8, 9 years now, 10 years. And his level of consistency is so high, it's frustrating just to watch. You know what I mean? It's like somebody who's so pretty, you're like, damn, you're pretty. It's sickening to look at sometimes, in a good way. I'm not saying in a bad way. And this is basically what they're going to be teaching you guys. So, anyway, short version, if you want to get on that list and you want to participate in that, I think um, if any of you guys have seen Sophia's trading, then you know that the concepts are going to be, and Sophia struggled for a year. She went a year without doing well at all and blowing out everything she ever touched. And incorporating the principles that are going to be taught in this took her over the edge, where she's cashing checks now as opposed to resetting accounts. Anyway, short version, and I know Janesh taught his 13-year-old daughter to trade too, so she's a better trader than most people who've been at it for a while. So anyway, I wouldn't put it out there if I didn't think it was going to be awesome. You guys can obviously make up your mind, and you guys can ask questions, and they can be available to you in the chat room. All right, we put in a bottom. Look at this. On the NASDAQ, how easy is this? Support holds. All the triggers are up. Guess what's going to happen over here? Any guesses? You already know what's going to happen. Probably going to go up.
Order filled.
All right, let's take another one. See what we can get away with. Now, hopefully we don't get a second divergence that ruins our day. If we do, they'll end up going a lot lower, so we don't even have to risk any more than this. And then we'll put one at 10 points, 65, 75. See if we can get 10 points out of half of it. And then ultimately, we'll see if we can go to the fib. I don't know if they're going to make it or if they're going to put in divergence and we're going to have to do it twice. We're about to find out in 2 seconds here. Divergence. See that divergence?
Stop filled.
That divergence means we're going to go lower, but it doesn't mean the trend is over, guys.
Order submitted.
It means you may have to do it twice. So instead of putting in a monster stop way down here somewhere, we'll just let the market go down as much as it wants. And if it makes an up bar with a still favorable look, we'll get back in again. If it doesn't, screw it. We won't. Does that make sense? So I don't know what's going to happen, but if it doesn't go up, then we don't take a
Order
second
canceled.
loss. So you got to take one because there's $900 available to the target. And, the second divert, I could have been out maybe one bar earlier, but I don't care about that. No big deal. So if support holds and we put in a divergence on the big chart, does everybody understand the words coming out of my mouth? So support holds, and then if we put in a divergence and go up again from support, we'll get the rest of that move we were looking for the first time. And why do I say that? It's because we didn't get there over here. Remember that first long we did? We stopped at the one-to-ones. That happens. And then usually 99 times out of 100 after support holds, this long trade gives you the rest of your money. They're being a little rude about it, but eventually they're going to give us the rest of that money to the upside. It's all, I say that, I almost said that super definitively, didn't I? I mean, they almost always do it. That's why, again, this is where I would personally probably try some type of momentum trade. So let's just say we get, a little bit more above there. Small triggers didn't get above here, so I'm not quite ready yet. We might have one more push down, but if we make a second higher divergence, guess what's going to happen? Remember
Order
that
submitted.
second higher divergence ruined the party over here? I don't even need a market flow chart. All right.
Order
We're not
canceled.
going up anyway at the moment. So look, Second higher divergence,
Order
I'm just
filled.
going to buy it. It ruined the day before, remember, to the upside. So let's see if it helps get the rest of that money that we were looking for. A little bit more assertive. It's not necessarily the easiest trade, but look, it's the same reason I got out, lower divergence, same reason I got in, higher divergence. And again, how far is it going to go? I mean, traditionally, we're going to go a long way. I'll take my 10 points on half if we get there, which I think is going to be cutting myself super short. But and then the other thing, look, for me, if we make divergence from one to ones, it's usually party over. Um, I almost hate taking 10 points here, but I'm going to do it anyway. I think it's just going to be cutting myself super short on some money, but we'll find out. Let's get the first 10 points, $200, and then we'll start complaining after that, okay? Sound fair?
Target filled.
All right, so there's 10, and like I said, we're probably going to the fib. So, look, this is where I would bring in the old market flow chart and say, look, I'm going to manage based on the market flow chart. So, assuming we get another up bar here, which, again, look, I could
Order filled.
probably add on a down bar. We'll see if that holds water or not. So I added on a down bar. I took my 10, but since we're breaking out a little bit and I got a down bar, I added on. It's either going to work out really well or it's going to be ugly pretty quick. And I don't even have to risk a lot of money because it's a momentum trade. So realistically, it has to go up now or else it's not going to go. I could be out right there. So
Stop filled.
I lost a tick. No big deal. Net. I didn't lose a tick. I made a bunch, but my add-on didn't win. That's okay. Now, trend trade long again. What do you think? Let me clean this up. I don't like to have all that mess on there, just so you can see. Are we still in a trend trade long look, or are the triggers not quite as good as we want to see? Do we want to take another trade? Man, I tried to pump it. When these little add-ons work, man, it's beautiful. You really compound that money a lot. That's just, you don't have to add on. It may not be in your wheelhouse, but if you can get one or two add-ons on a super strong trend with those one downs, do you guys understand what I'm saying? Here, let me rephrase it by using my trading plan. NASDAQ is really good for this. I probably wouldn't suggest it on S&Ps or something like that, but let me show you we talk about trailing stops using one up, one downs. But if you're short and you've got, 30, 40, 50 points to go till you get to your target, those types of situations, every time you get an up bar, add on. Every time you get an up bar, add on. Every time you get an up bar, add on. You could do it a couple times, and then, you're short 8 contracts with virtually no risk because you're trailing behind each new down bar, and then you really maximize one big ass move. Does that make sense? Have I ever known a pay scale other than never enough? No, sir. There is no other pay scale. All right. I don't know what that is. Anyway, I tried to get away with, because look, this is like the mother lode of Support holds, divergence, usually, look, I still bet you a cold beer we make it up here before it's over. We're just going to have to start over again. There's no reason for us not to make it up to that area. And it's a long way away. And again, if we get the opportunity, all right, we'll see. If we get above this 1-to-1, we'll get our opportunity to probably get the rest of it. So if we get a higher divergence that closes above the 1-to-1,
Order submitted.
it didn't close above the 1-to-1, but
Order
we're going
filled.
to do it anyway. We'll see what happens. I may lose, but all right. So I'll take half, and then we'll see. I'm pushing my luck a little bit here, guys, with this.
Stop filled.
I didn't make it. That's okay. Look, sometimes you take a market flow trade chance, which I did. Look, this is where I went long. I like the one down, one up as an attempt. When it works, genius. Obviously, this was the other spot where we had one down. And this is where I tried to add on, which is the most perfect look on the planet for adding on to a position. It just didn't go. There's not enough momentum on the other charts to get this thing to run yet. So, anyway, one attempt, and then you just sit back and wait. They'll probably have to marinate now and get down deeper into the support zone and start over. So, if we can hit 45 and then start over, again, when I say start over, I mean hit it and then roll the triggers, we'll start over. Until then, either the triggers roll up or there's nothing to do. Does that make sense? I'm not necessarily going short down to support because I'm not expecting it to go down. There's no good top. There's no good reason. So I still think we're going up. So I'll just wait for it to go green and start over again. And if it doesn't, I don't care. I'll just sit here and do nothing. All right, guys, questions, comments, concerns, things you guys want to go through, things you guys want to review, things you guys want to go for. Anything I can help you with? Is there something that you're struggling with? This is your time, 100% free time. I'm going to take a 2-minute break because I paused for the cause. And then from that break, we will, it's all about you. Man, that might be it. Market flow is starting to say so. We'll find out in a second. I mean, look, I can't make that decision for you. I think you should try one if you're ready. Here's my question for you, Jonathan. I hate to answer a question with a question. Are you 100% sure your trading plan wins and you can follow it? That's the question you have to answer. If you say, yes, my trading plan wins and I'm sure I can follow it, no, then don't waste any freaking money yet. I'm just saying. If you're not sure you're going to win yet, then don't do it. My market flow is going, go long, go long, go long, go long. Which the large chart is not saying go long, so I'm not doing anything. You got to listen to your large chart still. And that's the problem with the market flow chart. If you use it at the wrong time, because it's screaming go long right now. But if you use it at the wrong time, you're going to get your ass kicked and look up and go, oh my God, I'm getting my ass kicked. All right, higher divergence with a green background, with the market flow leaning up. The large chart still says no, don't do it. Which means it's a sucker long look on the small charts. We call it the sucker close to get people suckered into going long. Well, committing money to the futures market while you're experimenting is the wrong freaking idea. All right. Now the large short's closing up. The small triggers are rolling up. We're getting above our one-to-ones over here. This is where
Order filled.
I'd probably take one more shot at it. And if they get me, they get me. So this was my entry on a down bar with the triggers up. If I make 2 bars down, screw it, I'm out. So I'm only risking 3.75 points to make 10 and more. And if they bamboozled me, then I'm done. They're trying to figure it out. Remember, we said that we're going up to here. So, again, that's 10 points, but we could probably even make more if it goes up. So, we'll find out in a second if it's a trick or if they're really going up. Looks like it's a trick. Need an up bar right now or the party's over. And if we get an up bar, I can trail my stop a little bit higher. Because if they take that out, then the party's over. So I'm risking 4 points, $80 to make, I would say at least 13. What do you guys want to make? 14 points on the first one, if it goes. So, I guess we do have a pivot stop out at the high up here, but we'll see. How about this? We'll make $165 on the first half if. I don't even know if it's going to go. It's still pretty crappy looking on the big chart.
Stop filled.
Yep. That's what happens if you try to go long and your large chart still looks crappy. Yeah, it's worth it. Trying to finish the business up to the fib. Now it's really, I'm okay with it. I don't mind taking chances. If it goes, it goes, and if it doesn't, you lose 150, $80. So make 600, lose 180. Make 600, lose 180. Make 600, lose 180. I'll do that all day long. And again, I took a chance based on what I thought, not what I see. You guys see the difference? And again, look, Mark would whip your ass 9 ways a Sunday, and I would too if you posted a long trade, and I'd go, what the hell are you thinking? Right? So don't do as I say, not as I do. I'm willing to take a chance once my small triggers roll up. And again, I took it and it failed, but I still say it goes up. They just came down a lot further than they should have because they're rude. Now, you see how they're tempting you again to try again? It's like, no, I'm not doing it again. It's one and done on a take a chance. Maybe two if you manage your first one really tight, but it's one and done. If it doesn't, if it doesn't go, then just chill and wait. Here, watch this. Let's ask you guys a question here. Look at the triggers on these two charts. Do they suggest we're going up? So look at the triggers on my large chart and my market flow chart. They don't suggest up just yet. Now we're getting closer. See how the market flow chart finally is starting to lean up? Both triggers are up. White paint bar up above the other triggers. This is traditionally where it's gonna run. Traditionally. You guys want to buy one and see what happens? So not only do the small charts, see now we're free and clear, guys.
Order submitted. Order canceled.
We are free and clear to buy
Order
away
submitted.
and not have to worry about it at all. See that? Large chart agrees, small chart agrees, market flow chart agrees.
Order filled.
So, these are the ones where we finally get what we were looking for. All charts agree. Everything's headed in our direction. We can trail our stops behind up bars. I'm giving it just a little bit of room yet, just to give it half a second because they've been rude. But it should run right now. We'll see. Everybody finally said, oh shit, we're going. Here we go. We'll see. They're still not going. Well, they are just being rude. Rude. And I tried to put my stop out of the way, but they're not going to have it.
Stop filled.
Man, all right. I have to say, I'm a little surprised. Sometimes you have to do a same trade twice.
Order filled.
Alright, just rude. Anyway, alright. This is it, and I'm done for the day. So, if you guys have any questions, comments, concerns, things you guys want to go through, what do you guys think? I mean, this is the right trend trade as long as we don't make a lower divergence, so we don't have to risk as much. Shouldn't make divergence if it's going to go. Here, you guys want to watch the market flow chart? Man, they're just really being rude. All right, lower divergence, and then that's the end of the party, and that's the end of everything until I go eat lunch. And this is where I would
Order
add on to a
submitted.
position. If I make an up bar here without making a down divergence, see how I put a buy stop in? So if I get a one down, one up,
Order canceled.
and I didn't. They're just being rude. Okay. Anyway, that's okay. Lower divergence with down triggers. We lost a couple of points, but we didn't have to lose a lot. So they're just struggling here. That's okay. That was a good look, man. God, I thought that was going to go. And that's the whole thing. You don't know if it's going to go or not. That's why you get into it. And if it never gives you a reason to manage it, you're going to make $700 or $800. And if you do get a reason to manage it, you're going to lose $180, give or take. So, anyway, I would call that A plus perfect for the most part, with unfinished business up there. But anyway, now it's just crap. You got to recognize it. All right, so I am done for the day. I appreciate you guys being here. If you are new to us, again, go through the trading guide and get to this first section. I'm going to swap this out with the other one here pretty soon. It's the same info, just organized a little bit better. If you guys would like to have that link, I'm going to send it to you right here. Again, you want to get through this first section. This is where new traders from the indicator introduction to the first 30 days and beyond, this is where the new users need to spend all of your time. And I know we went through some fancy pants stuff over here. Just forget about all this stuff down here. So just get this first section, indicators to the first 30 days. Download a trading journal. And then when you're ready to do market replay, this is the spot right here, market replay education. And then if you have questions, please let us know. We're always here to help. Um, we'll get you to where you need to be. 100% without a doubt. You'll know where to get in. You'll know where to get out. You'll know the rules. So I'm going to take lunch. If you need something, say something. Otherwise, I appreciate you guys being here. I look forward to doing this again tomorrow with everybody. You guys have a great afternoon.